Hey friends, so as I'm talking now, the market is closed for the weekend, and just as I said, there was going to be this inversion polarity here. It used it as a support. Turns out that it used it as support. We can zoom out on the H1, you can see that happening here. You can see that there is this crossover, this intersection here between the M15 and the H1. That's exactly where you find this low happening. On the H4, it looks like it's right there between this here, this low, and this low. But as you can see, it tested generally in this area, and resulted in a support, deciding that this inversion polarity zone will be a support. I think that's what it's saying for now, and that this is going to then hit the weekly standard deviation target, which of 1867, which I have put, which you can see I have set the target here, and as well as I had set the stop under that inversion here, and I had entered here somewhere. I said I was going to wait until it got closer to the lows, which I did. I waited until I was satisfied generally with it and with the risk reward, and you can see that that is currently here at 29 pips to 71 pips, which is over 2 to 1 reward to risk. As you can see, it's on its direction there towards the target, if everything goes as planned, and the polarity was used as support here. You see that again on the H4, polarity was used as support, the intersection generally marking where one of those lows or highs was, and would be, right? So this was plotted. These lines were plotted, as you can see, on January 26th, showing an intersection here, and that is if this continues up, if this happens to be the retracement low and a continuation up in an uptrend, then that marked the low of the retracement, this intersection here generally. So we're about to see that, and definitely I will report on that if it turns out that we break this high here, and this was the low before breaking this high. I definitely will report that this was the intersection, but it would be a good idea to, I don't need to update this chart, I can keep this chart as reference, but I'll make a new chart with updated price structure for the standard deviations. This is an older one. This is even yet still an older one. This was on, this ended on December 16, and you can see how the price structure is also still conforming to that, but and this being the weekly time frame. So this one was this is the M1, the M15, the H1. So you can see that it's conforming to the longest, generally conforming to the longest deviation, standard deviation. but during that time around it, it's conforming to the other deviations. You see this here, this low is the H1 deviation, this high is the M1 and the M15 deviation. So, and this happened, those high and lows happened January 28, January 16, which is a month, well over a month after that plot was made. So, and that's not to say anything about this, this deviation price structure. So, which is the current one. It was, this one was created over a month after this one was created. So you can see that both are conforming. It's just that this one is tighter. This is conforming more tighter, and we're able to, it's more tradable because this one is looser because it's older. If I get okay, this one is looser because it's older, right? So if you see that it's older, so it's looser, then you want to update it. That's when you want to update it, and that's what we're doing here. So I've got the target and stop here, so we'll see what happens. It's about 60 pips away from the target that I set, and we've accumulated about 17 pips on that. We have about 17 pips profit and 60 pips to go. So 15, about I don't know, 1/5 accumulated, about 1/5 profit. So like I said, anyway, this should act as support, and that's what we see. That's what we see here, is that this is also another smaller layer of support. This is a bigger layer of support, and it's pretty safe because the momentum is towards that weekly standard deviation, and the monthly standard deviations are also higher. This is there's the monthly standard deviation. It's also right, so that's what it looks like on the monthly scale. On the monthly scale, we're essentially around the weekly deviation, already around the weekly deviation. But if you zoom in, our target is actually that weekly deviation. So, and it is about like I said, 1 to 2 over a 1 to 2 risk reward. So definitely a good risk reward. So there's definitely a lot of reason to believe that it's trending up, and because it's trending up, then it's likely to complete this current trade, this buy trade. So that's it. We have a daily standard deviation all the way down here, right? But this is not as strong as the weekly, and it's not around it either. So and the lower time frames are also pointing up towards the monthly. So the lower time frames, I think, indicate the intention of what direction for the long term. And we know that we can see that the long term, it's looking, you can think of it as looking at those longer term targets, right? The shorter term deviations looking at the longer term targets, and you can clearly see that what it's looking at is the monthly and the weekly deviations, not the daily. Okay, that's it. So that's where I'm leaving it. I'm going to see if it in fact hits that target, if it completes this target. If it doesn't, then we'll just think about this. If the price goes under this polarity here, then obviously I'll be targeting this, the M30 standard deviation, and this the stop will be right above this this polarity deviation here.